Deductions are ways to reduce your taxable income. Deductions work by taking your taxable income and subtracting the deduction. There's a standard deduction which most people take. That's the choice you pick if you can't itemize your deductions to exceed the standard deduction. From $13,850 to $27,700, depending on being a single filer or married filing jointly. So if you're single and your income is $13,850, you now owe $0. If we look at the median income of $75,000, that would make the new taxable income from about $57,500 to $62,000, which lowers the respective tax from about $8,000 to $9,000 instead of almost $12,000. That's 13.8 to 14.4 instead of 15.7%. This seems great for most families, but how does one exceed the standard deduction? Charitable donations allow you to deduct up to 50% of your adjusted gross income, which is after other deductions. So if someone donates to a nonprofit that their family started that essentially pays for their children's private education, but it also donates things to the school, that would count. You might get audited, but when you're wealthy, you also have lawyers and accountants to fight an audit. Business income can be deducted up to 20%, and for small business owners, this caps out pretty quickly with a total maximum deduction range of $36,000 to $72,000, depending on income and being a single filer or married filing jointly. How would the rich benefit from this? Well, with said lawyers and accountants, you can pretty much write off a ton of things as businesses. Want to get into photography? Start an S-Corp as a photographer and buy 50 to 100K worth of lenses. And oh, it turns out the private school has an event that your family's nonprofit will be donating to. So the family's nonprofit makes a donation by hiring 4 photographers, including yourself, at 30K. You have a loss of 20 to 70K, but now you can write off your expenses for your normal income. Repeat with other business ventures. And if you have a loss in personal normal income that year, it's okay. Who knows what you gain from long-term capital gains anyways? And you can roll your business loss into future years, further reducing your taxes for the future. But we're getting to the truth, where income actually doesn't make sense at all for the truly wealthy. It's about total wealth and how many of the truly rich collect very little income. But for now, these are my 2 minutes.